Today we are working on Chapter 16, Section 2, Component Percentages. We're going to be analyzing the income statement showing a net income, and then we have acceptable component percentages shown us in our book, but each industry is different, so you would have to check to see what those are for your particular industry if you're in a different business. But the ones we're going to be going through is the cost of merchandise sold component percentage and the gross profit percentage. Okay, and then there are also total expenses component percentage, which could be looked at, and then net income component percentage. But we're going to look at the first two, which are shown here, and just answer some basic questions on those. If you're above or below, depends on which one you're at. We'll get through and figure out what the percentages are and go from there. Okay, on page 401 in the book, we have auto number 4. A to Z auto parts determines that no more than 63 cents or 63% for each sales dollar should be devoted to costs of merchandise sold. Compare that and figure out what it is. So we are using the income statement that we created from before. We have this income statement and we have these component percentages that we're looking at here, these two. So what we're going to look at is those and put those percentages in here. So we have 61.1% is the percentage there, and the gross profit was 38.9%. Now our acceptable percentage is no more than 60%. Have we reached it? Yes, we have. Is there any more action needed? No. None. And on the gross profit, if we have 38.9%, it's not less than, so we're acceptable and none is needed. Now let's just say, for example, that our component percentage, cost of merchandise sold, which is 1, 1, 2, 2, gross profit on sales. Say we have the same percentages, less than 63% and greater than 37%. So if you reach one, the other one should automatically be okay. But we got the same amounts here. Okay, well, let's say that our cost of merchandise sold was 75%, and then our gross profit on sales is 25%. Is that acceptable? No. Is the gross profit on sales acceptable? No. So, recommended action needed. Well, if our cost of merchandise sold is 75%, it should be less than that. Thing we need to do is find a less expensive goods to sell for same price, or increase sales price. So you're going to have to figure one or the other. If you can't increase these, you're going to have to find a less expensive good to sell so that you can sell it at the same price. Now the gross profit on sales, if that's less than a percentage, it's pretty much the same thing. You got to figure out what you're going to do. You can increase the sales revenue by increasing the sales price of the item, or you can decrease the cost of by finding a less expensive alternative to the product that you are going to sell. So it's pretty much the same answer with those. The only thing is, you got to consider if increasing our sales price, is that actually going to reduce the amount of sales because the product is going to cost more. So it's a hard decision to make when you think of it. The other thing you can do is buy a expensive, it costs less, but maybe not as much as it would to do overall, and increase the price just a little bit more to offset that difference. So you got three different options there, and those are listed on page 400 in the book. If you want to get a better, if you want to be able to read what the actual answers are rather than just listening to me speak about it. Okay, for that's the end of chapter 16, section 2. So if you have any questions, you can let me know. Otherwise, do the on your own, and then do the application that refers to it, which would be 16-2 application. So just be aware of how these answers here for these two can work out. They're pretty much the same thing. And here it's pretty much the same thing. If one's good, the other one's more likely going to be good, because you have to go from 100%, and that's the way it is. So I'll talk to you later. Thank you.